Hi, my name is Conall Mac Coille. I'm Chief Economist here at Davy, and I'm here today to discuss our new forecast for the Irish economy that we published today. So we revised up the outlook from 0.9% GDP growth in 2013 to our new forecast of 1.3%, and our first forecast for 2014 is for 2.1% GDP growth. So some of the factors that have led us to revise up our forecasts are firstly the revisions to GDP itself. There had been a 0.5% contraction in Irish GDP in the year to Q2 2012, but with the new national accounts data, that was revised up to zero, and then we had another 0.2% rise quarter on quarter in Q3. So the GDP data itself has been stronger. In addition to that, we've seen the labour market continuing to stabilise, the first annual increase in employment in the year 2012 Q4, and if you strip out the 4.3% contraction in public sector jobs growth in 2012, underlying that, private sector employment grew by 0.5%. So both activity stronger and also the labour market. Within the GDP data itself, we've seen quite strong business investment, up 10% in 2012. That's really the multinational sector. A lot of investment projects that have been delayed in 2009 and 2010 coming on stream in 2011 and counted in the GDP data in 2012. And we think that flow of investment spending will remain strong in 2013. The Industrial Development Authority has pointed to a lot of foreign direct investments in Ireland that suggest the flow of investment spending should remain relatively robust. The downside is that export growth appears to be slowing quite sharply, down to just 2% in the year to 2012 Q3. That's down from 5% in 2011. And in terms of Q4, we saw some very sharp falls in goods exports on the monthly trade data that could push aggregate export growth into negative territory in early 2013, and that will certainly limit any recovery in the Irish economy, at least in the GDP data in 2013 and 2014. Overall, we still have domestic demand broadly flat in 2013, picking up a little in 2014, but again limited by the big fiscal adjustment. So there's 2.5% of GDP coming out in terms of higher taxes, reduced government spending, another 1.8% in 2014 plan. So again, those fiscal adjustments will limit domestic demand growth, but the underlying trend is that certainly the domestic economy seems to be flattening off. We're seeing that across a range of indicators in the banking sector, in the labour market, in terms of retail sales. We are beginning to see the domestic economy level off, and that's good news. So for more on this, please see our note which is on the Davy website, www.davy.ie.